Okay, so quick introduction. Since this is going on YouTube, I'm just going to tell everyone what this is. My friend Jonathan asked me to help him and explain all of these, how I invest and how I buy and sell stocks and how to invest in the stock market. So I'm just giving I'm just going to shoot the crap and try to give you guys a little bit of, I thought I'll put it on YouTube so that other people can take advantage of it as well. So, what does it mean to invest in the stock market? Basically, what you're doing is you're buying and selling shares of a company, and we went through what that exactly means in the last video. In this video, what we're going to talk about is the different trading strategies. So, number one, there is trading and there's investing. And the difference between trading and investing is trading is like buying and selling a product. If, let's say, I own a company that sells skateboards. I buy skateboards from this guy for $100 and I sell them to this guy and I sell them retail for $200. Let's just say those are the numbers. So that's a trader. Trader Joe's, he buys food from organic farmers and then he sells it to you for a good price. That's trading. That's trade. So retail, wholesale, import, export, that's all trade. And then buying and selling stocks, that also falls within the category of trade. But what you're doing is you're trading shares of companies. So there's no shame in being a trader. I know a lot of people will say that traders, it's a scam, they're different, you can't make money trading, whatever, da-da-da-da-da. If you know what you're doing, you can make money. As long as you know what you're doing and you do it well, and you really, really put in the hours, put in an hour a day for 5 years, you'll know what you're doing. So it comes down to research and figuring out what's best for you. But there are two different types of trading, which I want to go into. One is day trading and one is swing trading. So with day trading, you're buying and selling a stock in the same day. And what you want to do is you want to find stocks that have a lot of momentum. What that means is a lot of people are buying that company. A lot of people, there's news on the company. The company's coming out with a new airplane. The company's coming out with a new phone. The company is just reported earnings and they shot through the moon. They beat their earnings. They made so much more profit than what people expected them to make. So now everybody wants to buy this company because they think, oh my God, if this new product comes out, you know how much money this company is going to make in the next year and a half and whatever. Let's buy. So that's speculation. And what happens is that because of that, it's what in the investment world they call it volume. You have a lot of people interested in buying this company. It creates a lot of demand. There's a demand for it. We all need this company. We all need to own this company. Everybody in the marketplace wants to own this company. The institutional investors, the little guys like me and you, we all want to own this company. So what happens is the price starts going up because the people who own it already, they don't want to sell. They're like, I own the company and why should I sell it? And then the price goes up. And then the people on the buying side are saying, we'll pay more. And the sellers are saying, nope, not selling yet. But as I see the price going up on my screen, right, I start to think, hey, you know what, maybe I will sell. That's supply and demand. That's the principles of how the market works. And that works for anything. How much are they willing to pay? If a guy opens a coffee shop and he charges $5 for a cup of coffee and he gets people coming every single day, that's great. But if people stop coming, he might lower that price to $4, to $3, to $2, and then people start coming again and say, oh wow, this is good coffee, it's only $2 for sure, I'm here. There's hundreds of people coming. And then he says, oh my God, I don't have enough employees, I don't have enough coffee, I gotta raise this price. I have too many customers, so he's gonna raise the price. So then the price goes up to 3, and then it goes up to 4, and then people start to say, hey, wait, you know what? I don't know, I'm not sure if I wanna buy this coffee anymore, it's too expensive. So then those 100 people a day go down to 60 or 70 or 50. And then those people, they say, you know what, $4 a day, I think it's a fair price. I'm gonna buy it for that price. So what you're doing is so that's exactly how it works in the stock market. The stock shoots up, everybody wants to buy. And then once the flag is stuck in the ground, the stock peaks. It gets to a certain point where people are like, whoa, this is way too expensive. I'm not buying this anymore. It's just like the cup of coffee. That price is too expensive. I'm not buying this company. I don't care how much it's worth. And then all of a sudden the price starts to come down a little bit at a time. And then people people say, oh, the price came down a little bit. That's called a correction. Or, okay, now I'll buy, And the way they determine that is they measure the buyers and the sellers. So if there's more buyers than sellers, the price goes up. If there's more sellers than buyers, the price goes down. And the broker is usually the one who's trying to make these deals happen. And they have softwares, and obviously that this is so advanced already that it just happens on its own, where you see those charts going up and down. That's actually what's happening. You're seeing the supply and demand moving up and down. Now, there are different charts. And I'm going to do another video hopefully with how the charts work. There's the actual price, okay, that goes up and down. And then there's the volume of how many people are buying and selling. And you can actually look at the supply and demand. You could check the volume and you can see if there's more buyers and more sellers in each, and what you want to do as a day trader is you want to see stocks that have a lot of buyers, that have a lot of momentum, that have high volume transactions, a lot of buying, and then a lot of price increase. And that's momentum. So what you want to do is you want to buy that and just ride the tide. And then it could be after 10 minutes, it could be after 10 hours. You decide, or a few hours, you decide as a day trader. I don't think the market's open for 10 hours a day, but you can do it within 5 minutes to half the day. And you can say, okay, now the price is up. I'm out. I'm getting out of this. And then what other people will do is they'll say, I don't care if the price is up. I'm going to buy it from you, Joseph, or Jonathan. I'm going to buy it from you because I'm an investor for the long term, and I don't care if this price goes down a little bit right now. I think that down the line, it's going to be worth something. And that's how day traders make money. There's also, there's speculative investors who don't know what they're doing. They buy too high, they sell too low, and we're trying to avoid that. So what you want to do is you want to find something on the beginning of the trend that's got a lot of volume, that also the price is increasing healthily, and I'll show you how to do that in a future video. And I want to figure out how to do screen recording because that would be very helpful here. Swing trading is similar principles, except you're not selling during the same day. You're looking for companies that are on the uptrend. You're following trends that are trends that are going up. And what you want to do is you want to take those companies, you want to buy them, and then you want to sell them for a profit later. So you say, now it's beginning of August. I think I can buy this stock, and by the end of August, it'll be worth more based on the trend that I'm seeing, the momentum. There's people interested in this company. I think it's going to go up a little bit. And what you're doing is you're doing the same thing as day trading. You're just doing it a little bit in a larger span of time. And what you do is as a swing trader, you have to look at the moving averages. And I could go into a little bit more of the strategies later. And I'm going to link a couple of. I'm going to put some links in the description for you to check these things out. And you can do your own research, but that's pretty much the idea. Either you could day trade. You need to have $25,000 in your account, or you could swing trade where you start with a few bucks and you could just buy and sell later. The other way is through options. Options is a lot more complex. I don't suggest it for beginners. You could double your money in options, but you're buying and selling contracts to sell shares. So it's very abstract. And if you don't know what you're doing, you could really mess yourself up. So I don't suggest that for a beginner. Later down the line, maybe I could do a segment on options trading. But what I would suggest is putting maybe $3,000 into the market. This is how I started. I started actually by buying one share of Realty Income for $50 like 3 years ago. And it's funny because it went up to 80, but I didn't even sell. I didn't even care. I was just focused on the 5% of a year or whatever. But you can 5%. It's about 5% a year, and they give you dividends, whatever. So whatever. But what I suggest is putting $3,000 in, and then you can open up a margin account to take another $2,000 to borrow. Then you're trading with $5,000, and I can show you exactly how to do that. But don't do that yet. This video will just explain basically the different ways to trade and how they work. And I hope this is helpful. I'm doing the best I can. I don't know everything. And I'm putting this on a public forum so I can help other people. But again, I'm not a professional. I know how to trade. I doubled my money in times, never lost money in the market. And when I did, I made sure to figure out a way to hold on to it and sell it at the right time, and so that I always, came out in the green. So I hope this helps, and I'll see you in the next video. Thanks.